There's a fundamental question that is kind of like the first principles question that I think should be addressed head on this topic, which is why should $1 of Bitcoin held by a public company be worth more than $1? Because that's the dynamic that has existed and persisted with MicroStrategy for now coming up on the past about 2.5 years. It's traded at a pretty healthy premium to NAV. And so the big question is why? And actually, when I first encountered MicroStrategy, back when they were starting to do their convertible bond issuance, the first convertible bond issuance, I believe, was like in 2018, 2019. They started to buy Bitcoin with debt and with cash on the balance sheet, and then did the first convert issuance in, I think, 19 or 20. I scratched my head a bit because it was difficult. I couldn't wrap my head around why an investor would pay a premium for a public company that held Bitcoin as opposed to just buying Bitcoin spot markets. And then certainly when we had the ETFs approved in January 2024, it felt like there was even less of a reason because you can just buy IBIT and pay NAV. Why would you pay a premium to NAV? But as we've kind of dug into these digital asset treasury plays or crypto treasury plays or whatever you want to refer to them as, I think there's more of an explanation as to why these premiums may exist, and certainly if you're a long-term holder, why you may do better holding a digital asset treasury company than underlying spot. I think a big part of that is this concept of Bitcoin per share. So the MO of MicroStrategy is simple. They would like to increase the units of Bitcoin held per fully diluted share of common stock. That is the mission, goal, MO of this company. What this means in practice is if you hold, I'm making up numbers here, if there's like 1 unit of Bitcoin per share of common stock, at the end of a year, if you can increase that to say 1.2 units of Bitcoin per share of common stock, you've increased your NAV per share by 20%. So the ability to grow NAV per share is a reason why these things over a long-term time horizon could outperform spot. And here's the essence of it, which is in a very simplistic lens, when you trade at a premium to NAV, you can sell stock at a premium and use the proceeds to buy Bitcoin, increasing your units of Bitcoin per share of common stock. When your stock trades at a discount to NAV, you can do the inverse. You can sell Bitcoin and buy back your stock. So when you're above NAV, you sell your stock, you buy back Bitcoin. When you're below NAV, you sell Bitcoin, buy back stock. And both of those capital market maneuvers increase units of Bitcoin per share of common stock. And so what you're effectively doing here is shareholders are the beneficiaries of effectively arbitraging their own stock, whether it trades at a premium to NAV or a discount to NAV. So this dynamic didn't exist with Grayscale because there was a principal agent problem, and shareholders couldn't redeem when it was trading below NAV, and Grayscale didn't want to offer redemptions because they wanted to collect management fees. So typical principal agent problem. On these plays, there's no principal agent problem because shareholders are fully aligned. Management wants to increase Bitcoin per share. Shareholders want to increase Bitcoin per share. And then on Bitcoin ETFs, you also don't have this dynamic because the authorized participants are capturing that arbitrage. So unless these names kind of trade very efficiently right around 1x MNAV, I think there is an opportunity to hold on to them through the cycle, and the best management teams. And there are a bunch of things that you have to do to execute on what I just said. It's not very simple, but I believe the best treasury plays will be able to outperform spot crypto prices. And this isn't also to talk about capital markets access and converts and preferreds and all the other instruments, but at its core, I think the reason why I think these names are misunderstood, just to like nail down the point, is that if you can increase units of SOL, units of ETH, units of Bitcoin per share of common stock through capital markets actions, you have the ability to increase NAV per share and therefore outperform spot prices. Not every one of these companies will do it, but certainly the best. We believe some of the best performing ones will be capable of doing it.